Hello, everybody, and welcome to the Sunny Side podcast. Today, I am joined by Mr. Shaler Houser. He is an entrepreneur with a strong track record, but he is the recent CEO of a company called PC Matic. And I'm going to let Shay introduce himself. Shay, how are we doing, good sir?
Hey, Finn, great to be here. Thanks for the time and thanks for giving me an opportunity to speak with you. Yeah, I currently run PC Matic. We're a $20 million a year software company focusing on cybersecurity. And then separately, I also run a small B2B software fund, a venture capital fund that I launched in 2023 and invest in South Carolina based B2B SaaS startups primarily.
Nice. Well, I can't wait to kind of unpack all of this today, Shay. But can we kind of rewind and talk about kind of the journey, what it is that you started doing, what your kind of track record is, and what's led you to this point, please, sir?
Yeah, sure. I think I've always been an entrepreneur. When I got out of college, I went to military college, and when I got out, I went to work for a telecommunications company that was an employee-owned company. And over a 5-year period, that company grew from 5 million in revenues to over 100 million in revenues, and then sold to a publicly held company. And as an employee, I got stock in the company, and I went to the bank and borrowed money and bought more stock in the company. So when the company sold, I got a little hit, and I was like, "Well, that was easy. Let me go do it on my own." Little did I know how hard it was, but I ended up going back to the three founders of that company and talked them into doing a venture capital fund. So we raised a $10 million fund and invested in telecommunication services companies across North America, and got lucky, had a couple of really nice hits, and had one company go public, and we did really well on that one. I ended up doing the venture fund for 2 years and then realized that venture capital wasn't for me, at least at that time in my career. And I started a telecommunications company called Nuvox Communications, which sold high-speed broadband and local telephone and long-distance telecommunication services, and raised a ton of money on that company, raised over $200 million back in the late 90s, and ultimately filed to take that public on April 14th, 2000, which just happened to be the biggest one-day drop in the history of the NASDAQ. That was the day we filed to go public. So our timing was not good. We missed a lot of the dot-com boom. Although we had raised a ton of capital, we were burning a lot of capital, and ended up merging with a peer company out of the Midwest, and they were backed by Goldman Sachs. And we found ourselves with Goldman Sachs and JP Morgan Chase as some of our largest investors, the third largest hedge fund in the world. And we kept building out that company. And I ultimately left in 2003. We built that company up to over 1,000 employees here in Greenville and had a really good run with it. The company sold for $625 million. Along the way, though, we got recapitalized by the largest shareholders. So they facilitated a 1-for-100 reverse stock split, which, to put that into like real life terms, when we were going public, the price talk was about $12 a share, and I had 2.8 million shares of stock at that time. When they did the 1-for-100 reverse stock split, I found myself with 28,000 shares at $1. So not a really good outcome. Pretty brutal for my co-founders and I. 3 of my co-founders ultimately committed suicide. And
Really?
it was quite the run to go through. I barely hung on, dude. Like I barely hung on through that process, but was lucky enough to do another telecommunications company after that one. Sold that to a publicly held company in 2008, right as Bear Stearns and Lehman Brothers were melting down. And then started a cloud computing company in 2011, built that up. We sold that to private equity in 2021. Then did a digital health company called U-Turn Health, where we help families that were struggling with addiction, and merged that company with a private equity-backed group out of Dallas in 2023. And that's how I got to raising a venture fund. Yeah, I raised another venture fund, even though I didn't want to do it 30 years ago. I felt like it was a good time to do it, and did a lot of nonprofit work around Greenville in upstate South Carolina, working with economic development organizations that were supporting founders and entrepreneurship. And it put me in a really good position to get deal flow because I was so tied into the community here, and there were a lot of people that were looking for capital. So was able to deploy 80% of that fund over the last 3 years. We got a little bit left over for reserves to support the existing portfolio. And then early this year was recruited by PC Matic, by the founder of PC Matic, to help him grow this business. He's he's gotten to the point he's about 68 years old and just decided it was time for him to start to let go and diversify and things like that. So we're looking at options to grow PC Matic from where it is today into a 40 or $50 million a year business. And, talking with private equity and investment banks and the whole 9 yards to figure out what the right direction is for us and how we want to grow the company and who our capital partner needs to be. So got a couple balls in the air right now, but definitely having fun.
That is a good introduction. I mean, there was loads of things that I could have said about that, but I mean, the question that kind of caught my eye off that, like, what is the main, like, for the majority of the companies and like the ventures that you've had before, they all seem to be funded, like they're not really any bootstrapped. Is there a particular reason behind that?
Well, in telecommunications and cloud computing, as I was building those companies and working through the business plan, they all required pretty significant capital. So we were either building out data centers or putting networking equipment like Cisco gear and stuff like that in the ground with inside of the AT&T central offices. So these were companies that were going to burn, tens or hundreds of millions in the Nuvox case. So, yeah, I've never bootstrapped. I've always been comfortable raising venture capital, raising capital from individual investors, and then kind of working up the stack and eventually private equity. So, not the smartest guy in the room, but definitely have a lot of experience doing it.
No, that's very interesting. So I want to kind of touch back where you said that you kind of got so the 1 to 100 share thing. What does that actually mean? So like what is that? Is that where you get like liquidated? Is that kind of a similar thing?
Yeah,
to that? Or like what could you talk me through that process?
Yeah,
what that
so
actually means?
this was sort of late 2002, and the dot-com boom had the boom and bust had occurred. So the company was growing rapidly, staffing up, but we were burning about $4 million per month. So we were just high burn rate, nothing on the scale of like the large language models today, but the same general idea where you're investing significant dollars into building out the company, and while you're doing that, you're burning a lot of capital. Well, in 2001, 2002, our board was telling us just continue to grow the company. We have plenty of capital. So the message we were getting from the board was keep growing. We've got capital to support the company. Well, that was true. We just didn't know what the terms of that capital was gonna be, and we found out the hard way that it was going to be really brutal. So they essentially looked at the cap table and said, "Look, we're completely upside down. We invested at a $500 million pre-money valuation. The company may be worth $50 million today. So we've got to recapitalize and put more money in, and the new money that's coming in is going to get to buy about 90% of the company." So all the original investors, all the early employees, people like us that had put capital in, and I put my own capital in, we got essentially wiped out. And there was nothing we could do about it. It took place in a board meeting in St. Louis. I'll never forget it because I almost fainted. I almost threw up when I realized what they were doing to us. But we were, at the time, we were dealing with truly the largest financial institutions in the world. I mean, these folks are pros at structuring deals, and as sort of novice entrepreneurs, we got ourselves tied in a knot. So it didn't turn out well. I'm proud of the company because the company did real well, but as founders, we ultimately got wiped out, and when we complained about it, they just fired us and brought in a management team.
Really? That's literally heartbreaking, isn't it? So
it was brutal.
Looking back in hindsight, like how is there anything that you could have done to like not do that? To have that not happen to you? Is it just like who you got in to give investment in the first place, or?
I think a lot of it was due to timing. It really was. I mean, if you weren't there in 2002 in the technology world, you can't. It's hard to grasp how bad the meltdown was. I mean, it was catastrophic, right? It took the NASDAQ 20 years to get back to those levels, and companies like Cisco and the other telecommunications companies, stocks were going from $100 a share to $1. Right, I mean, it was just an absolute wipeout.
Heavy.
So even though we were private at the time, we were privately held, the valuation was being compared to the public comparable companies, and most of the public comparable companies had gone bankrupt. They had already been bankrupt, recapitalized. So we didn't go bankrupt, but we got recapitalized in that way. I think, looking back, I don't know if there was a lot we could have done to stop it. I think hindsight, would have spent less money. We should have shaved the company down, reduced headcount substantially, cut costs substantially, and then used the cash on hand to grow slower. But at the same time, we were being directed by the board to continue to grow and grow fast. So had we not listened to the board, I think they would have replaced us. We did listen to the board. We got wiped out, and then they ultimately replaced us anyway. So it was, man, not a fun time. I don't recommend it.
Yeah, it sounds horrendous, but I'm sure that you took a lot of lessons from that, and you obviously really learned the hard way. But so if we go back to when so how old was you when you first started the first venture capital? You must have been very young.
25. Yeah, I was 25.
25. Nice.
Yeah.
So then
Yeah.
you decided, no, I don't want to do this anymore. So kind of fast forward, what do you say, 30 years? Like what was the kind of new thing that you thought, why I want to do this now?
We were at the venture fund. We were, of course, investing in these telecommunication services companies, and I was watching how much fun the founders of those companies were having. I mean, they were having a blast. They were creating something from scratch and building a company and hiring people, and that excited me. I liked what they were doing, and honestly, I got a little jealous. I was like, that's really where I need to go. I need to go start an operating company and build a company because I know I can do it. Now, I was super naive and had no clue how hard it was going to be.
Yeah.
But I think that naivety at that age really helped me because it was like, look, I don't have anything to lose. I'll take the money I made at the previous company. I'm 25 years old. I'll roll it into this venture fund and maybe invest in another company or two and see how it goes. So yeah, definitely naive and not understanding and processing how hard it was going to be to build a company like that. I mean, I got really lucky in building Nuvox. I think the timing was great because the broadband market was starting to expand. Everybody was moving from dial-up internet to high-speed broadband. We were in a great position to provide the broadband networking to businesses all over the Southeast United States. And the story was compelling. So the investment community really liked what we had to say. So, this is sort of 1998, 1999, and capital was so easy to come by at that point. I mean, by that point, I was, call it 27 years old and spending time on Wall Street, but I was getting capital thrown at me at levels I couldn't comprehend. I mean, it was literally hundreds of millions of dollars. And I remember thinking a couple times, like, what are these people doing, giving me this much capital? Like, are they crazy? But I think we could tell a compelling story. And at that time in the industry and the stock market, things were just gangbusters. It was the wild, wild west. That was for sure.
That's crazy. So the idea of the fund is just to kind of invest in companies, give them some money, and let them do their thing, or would you advise them and kind of get involved with the whole thing as well? Or
we like to get involved. Yeah, I mean, we like to advise, and it's again, it's not that we're the smartest guys in the room, but if you've stepped in the same pothole 3 times, you can see that fourth pothole coming, and that's what we tell the founders. Is like, look, we're just due to experience, we're going to see things that are not obvious to you, but just pattern recognition for us. We see these things coming, and we can help you not step in that same pothole that we've already stepped in 3 times. So, some of the founders take that advice to heart. Other founders, they just have to learn the hard way, and they're gonna step in that pothole and twist their ankle and maybe never tell us, but we do like to get involved where we can, particularly with hiring and interviewing and helping develop compensation plans or go-to-market strategies for B2B services. It's just we understand B2B because we've done it a lot of times, so we like to add that value if possible.
So me being curious, how does the founders, so before you invest in their company, how does the founder's life kind of change? Obviously, say they're bootstrapped, say that they've got this way on their own. Now they want some capital. Now you fund them. What does that actually mean for them? So they just have to kind of run the decision by you, or?
No, we're typically taking roughly 10% stakes in these companies, so it's not like we're a majority shareholder, and we rarely take board positions. But, I'd say the ones that are thoughtful about investor relations maintain really good contact and communication with us. They send out good quarterly reports. They give us good updates. They call randomly and ask for support or tell us what's going on. And I think that's just good investor hygiene. In other words, if you're going to raise capital and you've been bootstrapped and you've raised maybe $100,000 or $200,000 from angels, friends, and family, that's different than getting a venture capital fund in. And once the venture capital fund comes in, there needs to be a little more clarity and transparency in the reports that get sent out. And I think that the folks that do a good job on that have the best opportunity to raise additional capital later on.
That's very interesting. So obviously you've kind of got the fund that you're running now. So I'm curious, what piqued your curiosity about PC Matic? Like obviously that's like a full-time role. So what made you think, okay, I'm gonna do it again?
It happened organically. It wasn't like a search firm called me or anything like that. It was a consultant for PC Matic, who is also a friend of mine, invited me to dinner with the founder, Rob Chang. So we had dinner one night, and I was pitching him on investing in my next fund. So I thought that was the whole purpose of the meeting, was for me to pitch him on investing in Founderville Fund 2. Little did I know, in the back of his mind, he was looking for a CEO. Well, I spent December and January talking with Rob with no thought about taking a full-time role in the company. I was literally pitching him on investing in the fund, and he seemed to want help with B2B services. And I told him, look, I've got time outside of the fund to do consulting work, so I can help you with things that you need support with. And over time, he called one day and he said, look, I really think I need a CEO. And I was 6 weeks into raising the second fund. I had about $2 million circled up. I wanted to raise at least $6 million to get the fund done. And I was just processing the fact that it was going to take me all year to get that fund raised. And I really liked Rob, and I really like PC Matic, and the financial position the company's in is very strong. It's a debt-free company. It's grown every year for 20 years. I mean, it's a really good company. So I don't know. I think I just had an itch to get back into the operating role and to start build something again. Yeah. Versus supporting the founders that I invest in and watching them grow the company. I watch how much fun they have, and I was like, you know what, I think I'd like to go have fun doing that again as well. So, nice. Like I said, it came about organically, and it felt like the right thing at the right time. And
so a bit of love for the game in there.
Definitely some love for the game, no question about it. Because I'm competitive and it's hard, and I like a challenge like anybody else, and I want to go win. And determining what win looks like for PC Matic is what I get to think about every day now. I also still have the fund. I'm still going to raise a second fund. I have bandwidth to do both, and I think I can do both. And a lot of founders raise venture capital funds. So, I think that's what I'll continue to do as well.
So somebody like you comes inside of the company, like what are the types of things that you're looking at, analysing, thinking like, how can we grow this? Like a really high level, like what are you actually looking at?
Yeah, I'm definitely looking at the team and the metrics and trying to figure out how each individual contributor is adding to growing the B2B sales in particular. PC Matic's got a great consumer business that just runs. They do a really good job with that. So for me, it was more about what type of capital do we need for the company? Yeah. How much capital is that? Do we need to create some type of recapitalization to bring additional capital in? Is that private equity or is that venture capital? And then at the same time, building out a plan for here's the type of people that we would hire. Here's the sales and marketing budget. This is how much money we need to spend on different shows and different events, things like that. So that's where I spend the majority of my time, thinking more strategically about the company versus tactically at this point. I'm 4 months in. I'm getting tactical, but it's still more strategic, high-level thinking.
What are the kind of metrics that you look at? Somebody comes in, obviously, like you say, you look at the metrics and check them out. Like, what are the main things? Is it just like the commercial stuff, or is there other things that I wouldn't expect?
It's both. I mean, I'm definitely looking at the metrics associated with return on investment for advertising through Google and Facebook and Instagram. We do a lot of TV advertising, so Fox News, Newsmax, shows like that. So we're buying placements on TV and social media on a daily basis. And that's about a $5 million a year budget that we're working with on that. So we're spending quite a bit of money on that. So trying to figure out the right placements, whether you're running a 15, 30-second or 60-second ad is very important. Times a day, days a week, things like that. And then trying to take all of that information and that data and figure out what is our return on investment for each one, and how do we use that data to figure out for the next month where we're going to invest in those different marketing channels. And then on B2B, it's much more granular. It's let's look at each individual contributor, each sales rep, what they're producing, how many calls they're making, how many emails, how many LinkedIn connections, what tools are they using? Are they using Apollo? Are they using our CRM the right way? Just, starting to get into the weeds about that to find the best ways for us to grow the company overall.
Okay, nice. So is the B2C and the B2B almost like two kind of separate companies inside one company?
Yeah, they're definitely two separate channels, and that makes it challenging, both an opportunity and challenge, in that when you go to the PC Matic website, we have to talk to consumers, but we also have to talk to enterprises. And we also have school districts as customers and state agencies as customers. So creating that type of communication on the website so that a variety of potential customers can learn and figure out where it fits in for them, it's not the easiest thing in the world to do. It's hard. So that's a never-ending sort of tweak. But finding the right language and the right distribution channels for B2B is also, that's something new that we're tackling, because we've never focused really on the B2B sales until recently. So it's a new channel for us.
It's exciting though, isn't it? So
it is.
What, as the old CEO, why does he want to kind of go more or push harder on the B2B side of things as opposed to scale up the B2, to the consumers that's already half there?
Yeah, I think he clearly understood that PC Matic had built a very reputable brand on a national level in the United States, and he saw the opportunity with B2B. He understands it. He sees it clearly. He wants to grow it, and I think just collectively, and he and I have spent time together. We both agreed that that's a great opportunity to grow, because it's a fraction of our business today. But we think we can double the size of the company over the next 5 years just by focusing more efforts on the B2B recurring revenue piece.
Nice. So what would actually be the offer? So you'd be working with clients, businesses, to do what for them? What would actually you be doing?
Most of our clients are using us for what's called endpoint security. So these are devices in the field, whether a phone or a tablet or a computer, whatever it might be. And we use a zero trust whitelist allow list program, which means if an employee clicks on a link that doesn't go by and get approved by our 22 billion pieces of software in the allow list, we're not going to let them click on that link. We will stop that link from going down. So it's a different way to address malware, but really why people love PC Matic is we simply stop malware. So we're going to block the links before you can ever download that malware. So for consumers, it's a huge deal, whether it's identity theft protection, things like that. That's where we specialize and where we focus.
Okay, nice.
VPNs,
so for businesses, you'd just be doing the similar sort of thing then?
That's right. We'll do the same. And we do today. I mean, the thing is, we have tens of thousands of endpoints for B2B customers, K-12 schools, state agencies. So we've got these great brand name customers that have been with us for years and love our service. We just have to do a better job of investing in that B2B go-to-market strategy to go grow it.
Okay, that makes sense.
That's what I have to execute on.
Nice. Okay, that makes complete sense. So would you kind of work alongside an MSP then, or an MSSP, or would you replace them?
Absolutely. Yeah, we have 375 MSPs that use our service today that they then take to their clients to protect them from malware. So yeah, MSPs are going to be a huge opportunity for us. We've got a great brand name with many MSPs, but there's 10,000 MSPs in North America, and we've got 375. So we can really grow that piece of the business. And to be honest with you, the company I built 2 companies ago, Green Cloud Technologies, We built a $30 million a year business exclusively through MSPs. That's all we sold through was MSPs. I had no direct sales force. So I've got a good handle on how to go support MSPs and how to grow MSPs. It takes time, it takes effort. There's no magic bullet. You just have to work with that MSP, establish trust, and go win one deal at a time, one deal at a time. And as they see how those wins take place, they start to sell more services for you. And then, you wake up one day and you've got 1,000 MSPs that are out selling your service for you. That's the win. That's where we want to get to.
That's great. So is that kind of what you're planning to do then? Is so go through the channel partners as opposed to the direct sales, or is it going to be a mixture of both?
Absolutely. We have direct sales now, but I think channel. I think the channel is the way to go, through MSPs or other channel partners like that can distribute the product to their service, to their client base. So that's where I'll focus. The majority of the investment will be around that MSP channel to grow that thing and build out the team that knows how to support MSPs.
So when you think about what would the investment actually be going towards on that point of view then? So you'd be paying to acquire an MSP, or acquire to or pay to build the team to support the MSPs?
Build the team, and then go to the appropriate trade shows, exhibitions, events, and then localize events supporting the MSPs. So the MSPs many times they'll put on local events where they bring in their clients or prospective clients. We need to participate in those. We need to be there. They need to see the PC Matic brand. They need to know PC Matic. But the majority of that investment that I'm talking about will be building out the team.
Okay, nice. That makes sense. Well, that's super exciting. I'm sure I can see why you've kind of got back in it. Like, it sounds like a great opportunity. How have you been finding it so far? Has it been like, yeah, I'm ready to go again?
Yeah, it's been exciting, and it's been fun to learn the team, get to know the team, figure out everybody's sort of core expertise and personalities, and just get back into the grind. I mean, it's a grind every day. It's not easy, but there's new opportunities all the time. And we won 2 really big sales deals this week, so that's got me fired up again.
Congratulations!
2 big school districts, yeah. So it's like these are big wins. These are $100,000 a year type contracts to support K-12 school districts. So those were exciting, and that fires me up, and that just tells me that customers they like PC Matic and they trust us.
That's fantastic. I mean, I was just about to wrap up, but I've got one more question now. So before we wrap up, so when you come in, right? How do you find the happy medium of completely disrupting the whole team, getting rid of people, getting a new team in? But obviously you might want to do that. You might think you might be useless, this guy's rubbish at his job. But do you want to come in and rock the boat straight away? How do you kind of judge that?
No, Rob has had the company for 27 years, and he's been the active CEO, building the team, hiring the team, and setting the way they run the company. So what I did not want to do intentionally was come in and make a bunch of changes, not at first. So it was much more status quo in getting to know the team and getting to know the business. So that was everything from understanding the financials, and then also, as much as anything, understanding Rob's goals. Where do you want to take this company? What's the vision 5 years from now? Help me understand that vision so that I can go execute on a plan that achieves what we're trying to achieve 5 years from now. So that's been a process as Rob and I have spent time together and gotten to know each other, just learning really how he operates and what his goals are. And it's like anything. I think it's a little bit like making sausage. You got a lot of ingredients, and it's like, this sausage, I hope it tastes good because it doesn't look real good right now. Yeah. But then ultimately, once all the ingredients go in and you do the mix and everything else, and then the sausage tastes great. So I think that's where we are in the process, is we're weeding through all the things that we need to weed through to figure out how do we accomplish the goal that Rob wants to meet.
That's great. Well, Shay, thank you so much for all of this. I've learned a lot from you. If the audience wondering, where can they get in touch with you and learn a little bit more about PC Matic and yourself, or maybe it's
Absolutely.
the fun that you want to talk about? Where can they find you, sir?
Yeah, so two places. One is Founderville.vc. That is Founderville.vc. That's our venture fund. And then, of course, PCMatic.com. That's just PCMATIC.com. And that has all the services and products that we sell. So go sign up today. And then you can find me on Twitter and on LinkedIn, just Shaler Houser. So that's SHALER Houser. I'm active on Twitter and active on LinkedIn.
Fantastic. Well, Shay, thank you so much for coming on. It's been a pleasure. I've learned so much from you. I appreciate it.
Finn, this has been great, man. I really appreciate it, and look forward to watching your show and you grow this audience and build something pretty unique here. So it's pretty cool. I'm fired up about the Sunny Side podcast.
Thank you very much, Shay. Ready?